Everyone, Maurice here. Welcome to Tanks Invest, where we can talk about investing, finance, and professional development. For today's video, is for entertainment purposes only. The stock that we're going to talk about today would be NIO, ticker NIO. As you know, across the board for the EV sector in Q1 and Q2 so far, we experienced a relatively sizable sell-off across the board in a macro perspective. With respect to NIO, it's been down close to about 60% so far from all times high, sometimes around the February mark, floating around like the $67 mark. And ever since then, we sold off all the way down to the $34 mark, around like the low $30 level right now. So I'm gonna get some questions around: are we gonna be reversing soon? Are we gonna be consolidated sideways even further going forward? When are we gonna be turning around? And are we gonna experience more sell-off going forward in the near term? So I'm gonna go through a technical analysis, take a look at that, in a more macroeconomic perspective, and also just take a look at the investor psychology behind the supply and demand dynamics as well. And I'm also going to give you some of the level of resistance that you should be looking out for if you think about dollar cost averaging or buying in for the first time, and my price and target for year end 2021 as well. So stay tuned, stick around, let's make some money. Okay, so moving on to the technical analysis for NIO, ticker NIO, just look at the historically speaking. See ever since last year in October, we're hovering around like the $20 mark, and subsequent to that, pumped up to $25 level. And ever since then, we had this huge rally from the $25 level all the way to the $56 level at one point. And this was mainly driven by multiple different exogenous factors with respect to Tesla being in the S&P inclusion, with respect to Tesla split as well, and also with respect to the Joe Biden's administration with respect to his green energy plan, right? Building a lot of EV charging infrastructures across the US nation, and also with respect to China, knowing the fact that NIO is a Chinese company, and I believe the Chinese government has proposed that by 2030, the majority of the vehicles, or 100% of the vehicles, going to be transformed into the electric vehicles going forward. So gas and diesel vehicles going to be obsolete going forward, which subsequently gave a lot of positive media affectations across the board, with a lot of public investors and obviously, for corporate investors, which subsequently drove this enormous euphoric pump from the $25 mark to the $56 mark, right? And ever since then, we kind of hovering sideways from there. And ever since in the Santa Claus rally, we pumped up even more, all the way to the $67 mark at the peak. And ever since then, starting in Q1, because of the multiple factors that we identified in my previous videos, Q1 is a tax season, and Q1 is oftentimes a down quarter for a lot of the EV and automaker stocks. And also on top of that, because of the chip shortage that we were basically foreshadowing, that will hinder the supply and the demand dynamics, which subsequently create an imbalance and a backlog in that perspective. And also on top of that, with respect to the bi-monthly speech that we get from the Federal Reserve, from Jerome Powell, scaring investors with respect to the inflation, scaring the investors with respect to the monetary policies, and also on top of the trade tension that we get between China and the US as well. And as of recently, Joe Biden had proposed the corporate tax and the capital gains tax adjustments, by enormous amount in percentile, which subsequently drove a lot of scare among investors. That subsequently drove this sell-off from the $60-ish level all the way down to the $34 level. And ever since then, we're kind of hovering, right, kind of bouncing up and down. We had this like one-time dead cat bounce because of this highly oversold dynamics. And you could see that the reason that we tested this area is because we have formed this resistance level somewhere around last year in November, before this whole pump up. And ever since that, we pumped up, but because of the fact that we've been getting these bi-monthly CPI report and also these Federal Reserve speech, which kind of like swinging investors' consensus and perception sideways for quite some time now. And right now we're just kind of floating, hovering up and down, up and down, up and down. And we saw that on May 12th, we broke the resistance level, the first resistance level that we were forming at the $34 mark, the $33 mark, and we pumped out all the way to you could see that at this area that we tested before on October 30th. And you could see that we tested the $30 mark one time, and that was because of the CPI report that we got. That was a lukewarm report that shaken people's confidence across the board, and also on top of that, with respect to the inflation scares that we are cultivating among public consensus and affectation that subsequently drove even more of a sell off. And on top of that, because May 17th is the last day for tax payment in the U.S., and that's also could be another catalyst for people to sell off, both on the corporate side but also on the public investor side. And whenever people are trying to sell, the stocks that typically have a higher likelihood of being sold are the stocks that had like enormous growth in the prior year, right? Because you have already gained so much, the opportunity cost for you to sell a growth stock, it's a lot easier, and it's a more palatable in comparison to like a stock that is more mature, that doesn't grow at like 30-40% like the way you see NIO. So it was just an easier stock for investors to kind of liquidate across the board, which subsequently gave another preferential treatment in the liquidation events that happened here, which subsequently drove even more sell off here. And you could see that we tested this level at the $30 mark, and we're kind of reversing right now. And I think that's pretty much the bottom right now. You could see that we formed the resistance level, pretty substantially, right? Firstly, we had this substantial consolidations that we have formed on the first wall. We have formed this once in May 13th. We formed this second times on April 19th. We formed another times on March 29th. We formed another time on March 8th. And you can see that we also tested that back in the day before this whole, basically free fall, somewhere around like the November 4th time period. So we could see that 1, 2, 3, 4, 5 times the resistance, and we broke that, so that would be like the sixth resistance. So this would be 1, 2, 3. So this is basically like a eighth resistance wall that we've formed so far. So that gives a pretty strong consolidation foundation that is highly substantive, that will propel it upward. And you could see that with respect to the MACD right now, we are, kind of fusing together. But you could see that the line, just look at the MACD compared to the blue signal line, you could see that we're slowly crossing upward right now. And the RSI, we are highly under the water right now. We are highly oversold, but we are seeing some sign of reversal at the moment. So I do see some sort of like a near-term pump up for NIO stocks coming up, which makes sense. You see today, Monday, we're up about 1.5% so far, and it's about like 10 a.m. Eastern time right now. So I think this is a pretty good level to buy in right now. If in case you missed the $30 Black Swans dip that we saw a couple of days ago. And I think the next resistance level that we should be seeing would be somewhere around like the $37 mark. So I do see a reversal coming for NIO stock going forward, contingent on no more negative media affectation with respect to the chip shortage that we're going to be seeing. And also, I do see more of a pump up ahead of the CPI report that we'll be getting in the subsequent month. So today is May 24th right now. So we will be getting the CPI report in about 2.5 weeks, if I'm not mistaken. And with respect to that, we should have some anticipation among investors to be buying the shares up ahead of time, basically anticipating that the economy is going to come back up. The supply and dynamics gonna basically revive going forward as well. That should subsequently give some positive push, and positive media affectation as well, for the NIO stock and a lot of the growth stock as well. That should subsequently propel the price to go upward from here, right? So I think for us to go down to the $30 mark right now would be unlikely, because of the fact that we have tested so many times now, and we have formed like this very strong substantial walls already. Again, right, 8 level of resistance, right? First, on the first level of resistance that we have basically 5, and then another 3 down here. So in the first level of resistance, the secondary level of resistance, build a pretty strong foundation that we should be propelling upward from here. On all charts, we are basically oversold on all levels, and we are reversing backward right now. So in the near terms, I would think about maybe buying a little bit about like 15% of your cash balance, I think the likelihood of like going back down to the 30 again would be pretty unlikely. I think I'll give that maybe like a 40-60% in terms of like the potential ratio. And for us to like, I heard even some people said that we might even test the $27 level again. I think that would only happen if there was a one major corporation that sell because of a negative news that happens internally that we are not so aware of, or maybe something with respect to like a really negative press on the chip shortage that we'll be seeing so going forward that will push back the supply and the backlog by even the later quarters in the future years, and that could subsequently maybe drive a little bit more negative media affectations. But right now I think we are shifting in the right directions. I think the selling pressure has already pretty much baked in pretty substantially, right? Again, we were down from the $60 mark all the way down close to about like a 50-60% sell off already. And for us to sell off another 10%, that's a pretty substantial sell off. And we are again right in the submarine level, we are under the water, and as you go down further and further, the pressure is going to internalize even more substantially and exponentially. That I believe we are at the point of reversal right now, knowing the fact that we tested this consolidation level so many times now. For us to go down even further, that will just be not the most logical, and it will create a huge outlier with respect to the trends that we're forming. So buying it right now wouldn't be a bad decision if I was you. I think I would start dollar cost averaging around here. If we go down, to the 30s again, congratulations. I would start buying more, like maybe put up 30%. If we ever get down to the $27, I think that's just a freak show events that happens, and that wouldn't really be logical based on what I see. But it's possible, right? Nothing is really certain in the stock market, and we don't know how corporate investors, which are the big institutional investors that have a lot of market drivers power, can deter the price level going forward. So we don't know, but I think the likelihood of that would be very unlikely, because I think a lot of corporations actually bought in around this level. So for them to sell at this level, that would just makes no sense, right? Because they ultimately want to make a profit for their investors, and it's their fiduciary to generate alpha, right? Not to sell on a loss for the sake of selling a loss because we have sold down so already, right? They should have sold like way earlier. And also on top of that, the tax season is finished already, so I don't foresee another catalyst for us to have more liquidation events going forward. So I foresee us like to be going back up from here, testing the again right the $37 mark from here, and then we should be going and consolidated from there, and then we should be testing this level one more time at the 40-ish $43 level, because that was a pretty strong consolidation peaks that we've had, like 1 2 3 4 5 6 right here, 7 8 9 10 right here. So we have a pretty good base right here, and that will be the first wall of resistance that we'll be testing. And then if we have really good results with respect to earnings that we'll be seeing in the upcoming months, and with respect to the macroeconomical shifts that we'll be going back to, the economy comes back up, people start buying cars, start traveling again, and the chip shortage get revived again, and then the sector rotation comes back again, we should be going back to the 40s in no time from here, which I am very exciting for, and I think that's what's going to happen soon. And I think the bottom we have formed at the $30 mark already. I give that like a 70-30 in terms of my confidence level. Right, so just to recap on all the numbers that we just talked about right now with respect to the current price level, I think the current level at 34.50, I think it's a fair number to get into, knowing the fact that I think we are at the verge of reversal at the moment. So 34 wouldn't be a bad price for us to get in. If we go down even more, because I don't know, just a negative media affectation that happens, but more on just the media manipulative side, that 31.50 would be an even better price for us to get in. But that's like again, right, a very strong resistance level that would form like 7 times historically. So if you dollar cost average here from that would be just a perfect sweet spot for you to get in. And if we ever get down to like a black swan event again, right? I think hitting the below 29.50, I think the V shape will be relatively sharp if we get there. We might potentially even hit 28.50. But because of the fact that we have formed this 2950 once historically, that the reversal should be there, and I think investors gonna be gulping this up like enormously, and will subsequently push it back upward, because by that time we will basically be in the deep sea already, and the pressure is gonna be so significant that it will reverse from there. Right, NEO is a stock that has really strong business fundamental, and all of this sell off that we've been seeing so far is really just because last year we gained so much, you know, hype from it, and also with respect to this year with just a lot of exogenous macroeconomical negative factors that baked in that subsequently drove this sell off. With respect to the growth potential going forward, with respect to the business fundamental going forward, nothing has really been shaken or changed its course of nature. So I think 2950 would just be a highly oversold level that gives me very, very good confidence into buying a lot more. And I might even load up the boat at this level. And with respect to my year-end price target, I think $85 or the 12 months price target is very logical, right? Just based on how we're trending so far. I think when we recover, we're gonna recover majorly because there's a lot of public investors' interest in this stock in NEO, and also when we come back and we get the green light from the recovery of the economy with respect to the chip shortage, and also the sector rotations to the growth stocks, NEO's gonna get the impact majorly. That is gonna subsequently propel it even higher than the all-time high that we've had. So $85 level is not really is more of a conservative side. I think we could probably even test above 100 in the next 12 months, but obviously we need to see how the macro factors are going to be shaking out going forward. And again, if we're going to buy now at the $34 level or the $34.50, we get basically a 150% of upside, 2.5 times your money, which is a relatively decent return, if you just hold it for now and not get shaken by the exogenous factors we've been seeing so far. So pretty good return. All right, so that's it for today with respect to my technical analysis on NEO. Really appreciate you guys for dropping by. Really love the engagements and really appreciate all the kind words that I've been getting so far. Please hit the like buttons, the subscribe button, also the bell notification, and please watch out for the next video. Really appreciate it. Thank you. Take care. Bye.